You're watching Squawk Box on Monday morning. The markets in Hong Kong and China open in an hour's time or so. Here's how the markets that are trading are currently performing, and we are seeing some conviction led the way. Nikkei leading the way, up by 1.6%, and Kospi in Australia pulling on just under 1%. Martin.
All right, get you a look at dollar yen right now. Let's bring up the charts. The cost at 154.03 right now. I want to show you shares of 7 & I as well. About half an hour into a fresh week of trade up in Tokyo, trading at 25.83 yen a piece. That's up a little bit more than 1%. The founding Ito family still trying to raise money to take the company private. According to our partners over at the Nikkei, it's approached U.S. investors, including KKR, about the possibility of joining a proposed takeover. Let's bring in Nick Smith, Japan strategist, CLSA, and our guest host Francis Tan, Indo-Suez Wealth Management, is part of the conversation as well. Nick, great to see and appreciate your time. We'll get to the fate of 7 & I in just a little bit. But the macro, Scott Bessent, nominee for Treasury Secretary, finally have a name. We know his backstory or history. Jim Chanos, also Soros, broke the pound, called the yen the right way as well. What does that inform your thinking, if it does at all, about what a Treasury under Bessent would mean for a strong dollar?
Sure, I think what we've heard is it's likely that Japan benefits from the Trump bump very considerably. It's a geared play on global growth. It's relatively lightly hit by tariffs in that it is offshored just so much that, for example, Japanese automakers likely to be hit less by U.S. tariffs than the U.S. ICE makers. As far as Treasury is concerned, there has been talk of actually trying to push down U.S. rates and weaken the dollar. That moves in the same direction as tariffs, and I think that would actually be quite good. So I think the expectation is the yen gets to about 140 to the dollar. Which would be probably quite good, in that I think when I'm on the road talking to U.S. investors, the number one thing that keeps them out of the Japanese market is the ever-weakening yen. So as it is at the moment, you've locked Japanese rates pretty much. That means every time global growth goes up, therefore the U.S. Treasury yield goes up and the yen gets weakened. So it almost makes Japan uninvestable, in that every time share prices go up, you lose that on the currency. So a reversal of that would actually be very nice. An impact on profits is relatively small.
Right, Nick. Well, you see, usually there are a lot of investors or clients who are asking, oh, if you are predicting a strengthening in the yen, that's going to impact quite a bit on the Nikkei, that's going to be quite a bit on the equities. So it's very hard for them to think about, okay, if yen is appreciating, equities are coming down, so do I still maintain my Japanese equities, or do I look elsewhere? So how do you usually reply to such investors?
Well, obviously, in our industry, unfortunately, a period of 8 years or 10 years is considered always. So they think always the yen weakens when share prices go up. And I say that's entirely the result of the work by Governor Kuroda that made Japan practically uninvestable, because it locked Japanese rates and meant that every time global growth picked up, the yen weakened. I think from here on in, we'll have something very different. We'll have the Japanese rates able to go both up and down, and therefore that effect disappears. You'll be surprised to see that actually, if you look at the relative performance of Japan's foreign demand-related sector, it barely moved at all relative to the market since 2019. And just remember that in 2019, the average forex rate was 109.01. So we've moved all the way from 109 to 162, and yet the foreign demand-related hardly outperformed at all.
Interesting. Well, I've been reading quite a bit that the Japanese IPO market has been pretty hot this year. I mean, there are also some IPO markets within Asia, including Malaysia, that's been pretty hot. So what's your outlook for 2025 IPO markets? Do you think it's going to be a lot more vibrant as well?
Well, the main thing for Japan, of course, is that both its activism market and its private equity markets have been absolutely on fire. So finally, those two are working together. They see Japan as a dirt cheap market with surprisingly strong growth. So you've got pretty much all the time 400 companies trading below 5 times EV/EBITDA in Japan, which is, you know, a 20% yield, which is pretty exciting, especially with money costing somewhat less than nothing. So both of those working together. Ultimately, the aim is to get those listed through public offerings. Makes Japan extremely interesting. In terms of activism, Japan is 2/3 of Asia, and it's the world's, well, both in private equity and in activism, Japan is the world's second largest market. In activism, 4.5 times the size of the next biggest market, the UK. So very attractive indeed.
Nick, when you look at the fundamentals from capex to the consumer, would you say that the Bank of Japan is teeing itself up for a move in December and resumption of normalization?
Sure. I mean, I think if the Bank of Japan doesn't move on the 19th of December, it thoroughly deserves a breeze block through the window. So you're looking at the numbers just out on Friday for CPI, and we had the price of rice up 59% year on year. If you look at the prices of fresh foods, particularly seafood, since the dawn of Abe up, over 60%, and wages most certainly haven't done that. So you have some very, very angry housewives at the moment. Much of that is the result of importing inflation due to the weak yen, due to the BOJ's lackadaisical attitude to raising rates. This cannot go on. And raising rates, its own studies suggest, would benefit households, would benefit corporates, and would benefit the finance sector particularly. That makes financial sector very attractive, because my forecast is that we'll get 25 basis points in December and another 2 raises in next year.
Everyone's got a breaking point, haven't they? I'd like to see Mrs. Watanabe hurl a breeze block through the Bank of Japan's window. But anyway, let's hope it doesn't. Let's hope it doesn't come to that, Nick. Thank you very much indeed. Appreciate it. Nicholas Smith there and from CLSA, and my thanks to Francis Tan from Indus Wealth. Now then, coming up next, it's time for our weekly Access ASEAN segment.